Hello, I'm Chris Flood, ETF Stream's Chief Correspondent, and I'm here with Axel Lomholt, the General Manager of the index provider Stoxx. Thank you for joining us, Axel.
Thank you for having me.
So, can you tell us about some of the most important topics of interest for index providers in this period of rapid expansion for the ETF industry?
Sure. Yeah, I think given this conference is about the ecosystem, I think one of the big changes we've seen is the shift from standardized index products to customized index products. And what I mean by that is when we develop ETF products back in the day, like 20 years ago, you would typically figure out what is the concept that we want to deliver an index on. And then you will go and find a standardized index off the shelf. And that has completely changed now. So what we see clients, they want a very customized, bespoke, tailor-made solution. So that is changing everything in the value chain because you're really sort of moving from a calculation agent to becoming an investment advisor. We spend a lot of our time with clients designing investment solutions. So that's a big shift.
So this acceleration in interest that we're seeing in active ETFs is extremely interesting. It's been a big theme at the conference here today. Now, how are index providers viewing this development?
Yeah, I mean, I think initially there were some concerns around, what does that mean? Does it mean that active shops are going to develop their own indices and so forth, right? But at the end of the day, I think from a broader perspective, it's positive for the ETF market. It means that retail investors can get access to active exposures at a lower cost. So I think broadly speaking for investors, it's a good thing that we're seeing active providers using ETF wrapper as a distribution vehicle. So I think that's good. I think some of the challenges still remain though, and you still have to outperform the underlying index. And we all know that's a tough thing to do. So that's what we're trying to help with. So we are more concerned about what actually goes into the ETF. So we are talking to active ETF providers about designing strategies that can beat indices.
With regard to ESG investing, we're now seeing a very nasty political backlash against ESG investing, led particularly by politicians in the US, but it's having a chilling effect here in Europe as well. Do you think that's just a blip, or do you think that the interest in ESG investing is still a real thing that index providers are having to deal with?
It's a very good question. So let's unpack that a little bit. It is true that there has been a blowback, and we've seen less of a flow of funds into ESG ETF for sure. And I think we as an industry we are a little bit guilty of that because there was a lot of products, there's a lot of confusion in the market, maybe a little bit over-regulated. So I think there's a little bit of a step back now. But at the end of the day, I don't think the fundamentals are changing. So we are spending a lot of our time with asset owners and pension funds, and they are still very concerned about the climate, for example, right? So fundamentals have not changed. So I'm not sure it's a blip, but I think there is a slight change in the way that investors are going to be looking at what strategies they're going to implement, which is probably more about climate science, clean tech technology, and so forth.
Yeah. Because things like clean technology have been a big area of focus for you.
It's a big area of focus, right? A big area of focus. We see a lot of our clients that are interested in what are some of the new technologies that will sort of change the landscape when it sort of comes to climate science, climate change, and so forth, right? So coming back to your earlier question, I really don't think that there is a change in fundamentals. And we've seen that before with sometimes that you remember the swap-based ETFs versus directly replicated ETFs, so sometimes goes through these phases where the investors just have to figure out what's the right future here.
And Stoxx has built a reputation as a provider of innovative thematic indices, but has there been a cooling of interest there?
Yeah, I think if you look at the flows, there has been a cooling of sort of flows into thematic ETFs, but I think we need to look at the broader backdrop. It sometimes happens when you sort of see there is more uncertainty with investors. So typically you go through a phase where investors, when there's uncertainty, they would choose safe haven assets like big broad-based indices, they look for fixed income, treasury yields and so forth, right? They're not necessarily looking for thematics. I think it's going to come back once we are through this phase of uncertainty. So I don't really think that there is sort of a step back. We're not going to use thematics because thematics are a really helpful tool in building portfolios if you want precision exposures to some of the technologies we just talked about, that's where some thematics can play a big role.
And there's always new ideas coming through. We've just been listening to a very interesting presentation by one of your colleagues on the retirement solutions that index providers can work towards.
No, there is a lot going on in that space. I think that's actually a very good question, right? Because we're seeing now ideas that have sort of sat within derivatives, within sort of mutual fund space. We're now transitioning them into ETFs. So target risk, target date, retirement solutions, right? So there's a lot happening there, and it's very interesting.
And this is a really huge event. Have you been able to enjoy any of the other panels or discussions?
I think it was very interesting because when you and I met in the past, there was probably like 5 stands, and now it's huge, right? So I think that's just a reflection of ETF as a vehicle that retail investors can use, right? It's been very popular, and there's been some good sessions there.
Well, thank you for joining us today, Axel.
Appreciate it. Thank you.